What if a single decision made in one meeting could ripple through your mortgage, your investments, and even the global economy? With the Federal Reserve's next move on interest rates just days away, everyone's asking, will they cut or will they hold steady? In today's update, we're focusing on a pivotal question. Will the Federal Reserve cut interest rates at their upcoming meeting on December 18th? Just 3 weeks ago, right after the latest CPI inflation report, the market was strongly convinced a rate cut was on the way. According to the CME FedWatch tool, there was an 82.3% probability that the Fed would lower rates this December. But since then, the odds have slipped. Now, there's about a 70.3% chance of a cut, meaning there's also nearly a 30% chance rates will stay the same. Why the shift? This subtle shift in expectations can be traced back to the recent GDP report for the third quarter of 2024. The economy grew at a solid 2.8%, driven by strong consumer spending, exports, federal government expenditures, and investments in non-residential fixed assets. In simpler terms, the economy is performing well, so well that it makes one wonder, if things look this strong, why cut interest rates at all? Balancing growth and inflation. While strong GDP growth can reduce the urgency for a rate cut, inflation remains top of mind. House Budget Committee Chairman Jody Arrington cautioned that, despite improved growth, inflationary pressures may still be fragile. This sentiment aligns with what the Federal Reserve monitors closely, the PCE inflation measure. Most recently, PCE inflation came in at 2.3% and core PCE at 2.8%, both meeting expectations. No surprises here, and thus no major jolt to market predictions. Looking behind the curtain. The Fed's recently released meeting minutes shed some light on their thinking. They expect inflation to gradually ease back to 2%. More importantly, they indicate that while rate cuts are on the table, any adjustments will be gradual. They don't want to aggressively cut rates and accidentally fuel a resurgence in inflation. As we approach December 18th, analysts and investors alike are leaning toward a quarter-point rate cut. Such a move would bring the Fed funds rate down from 4.75% to 4.5%. The Fed's long-term goal is around 3.0%, but given the current strength of the economy, they're not going to rush. They want to avoid reigniting inflation and are content to let the economy keep humming along, unless something drastic happens. These decisions ripple through everything: mortgage rates, stock markets, cryptocurrency, GDP growth, and unemployment. Understanding the Fed's mindset helps us anticipate what might come next. For now, the calm prevails, with the market expecting a gradual easing of rates. We'll see how long this steady climate lasts. In the meantime, I'll keep you updated as new data emerges. Thanks for watching. Please subscribe and have a wonderful day.